thing regarding economic value added, another statement, market value added or shareholders value added. We are teaching these things in final chartered study materials. All these are there, but I hope all these value added statements will gain importance, and the managers should be analyzing these value added statements to draw many conclusions. And all of you know the XBRL will also help us in preparing many financial statements and drawing conclusions. Lastly, in my concluding observations, I will tell you a few things. The first one is, why not to have one strong internal control system so that good financial statements should be there, good analysis should be there. Second, why not to have good human resources in the accounting department? Third, why not to have good technology starting from artificial intelligence or blockchain to bring a lot of innovations and changes in the accounting system. And lastly, we should be able to do, the B schools should produce some good students, future ready students, and the professional institutes like ICAI should produce good managers, those who are able to do good financial statement analysis, so that the information is available to various levels of management for decision making. With these kind of observations, I will close my part. Any questions later on after the resource persons they finish will answer. So thank you very much, Dr. Madhav.
Hello. Thank you, sir, very much. So at the end of that so panel members discussion, I will share you the questions and the question answer session will be there.
Thank you.
So now I would like to invite Chartered Accountant Sri Rajiv Shekhar Sahu. Am I audible, sir?
Yes. Good afternoon and namaskar. Thank you, Padmanabh Babu, Professor Padmanabh Babu, for inviting me to this occasion amidst COVID, where COVID is threatening each one of us, and we are struggling to survive through this period. Professor Dr. Ranjan Kumar Baul, Professor Dr. Ashish, all other guests, participants. Now, I don't think he could have chosen something better than financial statement. And financial statement, the older it is, the more research goes into it. Financial statement, I would call, it is the beginning of the end of the beginning. On one side, the annual statements are concluded by preparation of financial statement, which has the profit and loss account, the balance sheet, the cash flow, and all other related information, and it has to be read in totality. Unfortunately, many times it is thought that a partial reading could give them light, which is actually not. And the second part is that it is the balance sheet which gives action and decision for every managerial action. Now, a corporate world lives on the financial statement. If financial statement is not correct, is not giving the correct information, then the whole exercise will go for a 6. As as it is happening today. And as the Professor Board has given some examples, now the question is, the number of examples are increasing every day. That it will be difficult to give the examples also. They are so large in number. Starting from collapse of the banks, collapse of the corporates. Now the question is, why is it happening this way? The principles are very clear. The standards prescribed are quite authentic, is quite reliable or supposed to be reliable. Then what happens? Why then we don't get the desired result? And this has been a pain for all professionals, all professors, all people involved in the preparation of financial statement, and when the very basis of preparation is either wrong or is misleading, it has led to a criminal offense. Now, I put it the other way, that giving or misleading, generating misleading financial statement and not giving true and fair statement is part of financial terrorism. You take any example in the recent past, you will find a number of cases that have come. To top it, I would say the ILFS, Infrastructure Leasing and Finance, because of wrong financial statement, 90,000 crore of precious bank's money, which is nothing but depositors' money, was put into high risk. Now this is one example. Now question is, the accountants, the managers, they took shelter under some theoretical guideline and lost the sight of propriety. I have, in various forums, I have said, and in the board meetings also, I have said that it is not the procedure which is important. It is the propriety. It is the ethical standard which needs to be kept in mind. And your small negligence, your small wrongdoing, thinking that nobody is going to see this, is going to create havoc in the financial system. And as rightly said, I do not like to disown that today the financial statements are seen with less credibility than probably earlier. I don't say that earlier also, or earlier it was all prepared with fairness. I'm saying when more and more of such cases have come, and it is found that the people preparing it, the people who are signing it, the people who are deciding on it, that means the accountants preparing, the auditor signing, the board approving, all of them are to be held squarely responsible, because I cannot agree that without the knowledge of the accountant, such things can happen. Without the knowledge of the auditor, it can happen. If it can happen without the knowledge of the auditor, then the auditor don't deserve to work. And the board of directors certainly deserves the required punishment if they have failed to discharge their obligation as director when they adopt. If they are not able to foresee the status of the company where they are sitting in the board, I think it is very unfortunate to give them clean sheet saying that the independent directors and the whole-time directors were ignorant because they come once in 3 months, once in 2 months, and they had no knowledge of the complications of accounts. And therefore, the Ministry of Corporate Affairs, the Institute of Chartered Accountants of India, have time and again come out with various accounting standards, various and rigorous punishment, and the stock exchange has also come out with various standards so that such practice is avoided. And as this topic is such that we can go on discussing for hours, because this will have no end if we start discussing. But just to conclude, in case of ILFS, what happened, the example that I gave is the balance sheet, the fixed assets. I think Professor Baldwin was sharing about the quality of asset. Now, the road sector, road was not getting complete. It was on a BOT basis, on toll collection. The road was never getting complete. The interest during construction was being loaded. So the asset was increasing without any capacity and the generation of revenue. And one day situation came to the light when it was found that the interest during construction was wrongly loaded indefinitely. Now, earlier there was no such provision which said that for this purpose, the interest during construction need not be loaded. And therefore, in the last CARO drafting, where I am a member, we redrafted that if after 1 year of scheduled COD, if the asset is not complete, then you have to suitably disclose in the balance sheet that it has already crossed the COD, and even after 1 year, the asset is not complete. So, as Professor Ball has said, that there will be many examples to say how the current assets have been manipulated, how the fixed assets have been manipulated, how the impairment has affected, how you have continuous sundry debtors but not realizable. So, and another aspect is the borrowing. People have gone for borrowing and without matching or without having corresponding ability to generate return on such investment. So I can only say from the fraternity of accountants that now it has become very stringent for any auditor to sign a balance sheet which has such kind of lacunas, and I, as an auditor, I will refuse to sign if anybody has produced a balance sheet having this kind of lacunas. I am sure the profession of accountancy at large will rise to the occasion, and the people involved in the accounting process will have to share 1/3 the responsibility, 1/3 by the auditor, and 1/3 by the board and management. And that is how, despite sufficient knowledge, our ethics, code of conduct must be in the right place in order to discharge the responsibility for the third parties, especially who are relying blindly on the expertise of the auditors. Thank you very much. And due to my health problem, I will not be able to continue, so I may be excused. Thank you, Padmanabh Babu, for the opportunity. Padmanabh Babu, are you able to hear me? Okay.
Hello.
Dr. Mahapatra.
Hello.
Dr. Padmanabh Mahapatra.
Hello. Hi. Hello. Good evening, sir. My name is Dr. Baroda. I belong to ASBM University. Sir, I think Padmanabh sir has some problem of joining. So quickly we go for some kind of question and answers. Safely, sir.
Now Professor Ashish Kumar Sanna will speak, I think. That is the agenda. Dr. Padmanabh Mahapatra.
So some technical problem was there, sir.
Uh-huh.
Now it is audible, sir.
It's audible. Continue.
I think they said Chartered Accountant Sahu was completed.
Yes.
So Professor Sanna.
Yes, sir.
Professor Sanna, please.
So good afternoon, everyone. Professor Ranjan Kumar Bal is the professors of professors, the teachers of teachers for almost 4 generations of teachers. The organizer, Padmanabh Mahapatra, Dr. Padmanabh Mahapatra, is a very, very enthusiastic people, as well as the good auditor at the right moment that I have heard his introductory lecture. And CA Rajiv Shekhar ji is a very senior person in the field of profession. So, and so many professors, students, scholars participated in this virtual conference, video conference. On behalf of myself and behalf of my department, I really thankful to everyone for inviting me to share my views on the particular topic that you have selected. It is very difficult task for me because there are 2 legendary people speak out and shared their very, very interesting observations on the topic. Professor Bal is a veteran professor on this particular field. He has so many walks as well as a thesis guided of so many students on this particular field. And another Rajiv ji is also a very, very veteran and experienced professional in this particular field. So it is very difficult task for me that what to say, what not to say. However, I am trying to my level best. As I understood from the lectures of Professor Bal and Professor and Rajiv ji, that Professor Bal rightly mentioned about the very, very important examples, crisis and the biasness and the problems analysis, challenges, and the role of the different stakeholders. At the same time, Rajiv ji also mentioned some of the important aspects of the analysis of financial statements and the role of the chartered accountant as well as the SEBI as well as the stock exchanges. So keeping in mind, as we know, the Professor Bal sir mentioned the research aspect, teaching aspect, and the practice aspect, and the investment aspect. There are different aspects and different stakeholders that directly and indirectly involved to analyze the financial statements. But going to this topic, in a broader way, I'm just try to try to say that some of the basics of this kind of analysis. We already know the accounting information are of basically 2 types. One is a quantitative, another one is a qualitative. When a financial statement presented by a company or report published by the company in the form of annual report or any kind of report. There are qualitative information and non-qualitative information. I mean the quantitative information provided by the company for decision makers or for managerial decision makers. So we do not think only the quantitative information is sufficient at the right moment to analyze the company or any kind of challenges and problems of the different institutions and banks, whatever we may. But at the right moment, sir has already mentioned, there are numbers as well as the narrative disclosure part, also an important issue at the right moment of the financial statements. So financial statements, we do not consider only the analysis from the analysis point of view, only there are basic three important statements. That means the balance sheet, the income statement, as well as the cash flow statement. There are so many supporting statements as well as the annexures or reports published by the company in their annual report or in a different form, and it has been uploaded in their own websites. So why it is important? Sir has rightly mentioned, for the different stakeholders, there are different objectives and perspectives. But being a researcher, being a student, being a analyst, being an investor, their objectives and their perceptions are different. The level of understanding are different. Their analytical skills and tools are also different. So that is important from the decision maker's perspective, because I want to take decision, you want to take decision, your objective and my objective are not same. So that's why the tools, maybe some common tools, maybe some more and more tools to be used for analyzing of the financial statements. So this is the fundamental aspect of this kind of analysis. When you move to the analysis point of view, there are different tools, techniques adopted by the different, so many years, over the years, have been developed by the different companies or the researchers or the academicians, or the standards has been set by the different bodies, national bodies or international bodies. How to analyze, what to be considered or not to be considered. So sir has rightly mentioned about this kind of fair value concept or the market value concept or the economic value added concept. So these are the different things at the right moment came to the market. Now if you look into this pandemic or in the COVID-19 cases, or at the right moment that the lockdown process starts and the economy is going down, and the slowdown of the economy, as well as the problem in this kind of. Am I audible, sir? Am I audible? Am I audible, sir? Hello.
Yes, sir. It's clearly audible.
Okay. Okay. So
yes, sir, it's audible, sir.
Yes. Thank you. So if you look into this pandemic, or at the right moment the technological development, so now the new dimension has been emerged. What are the new dimensions? The new dimensions look like this. Say, being a professional, being an accountant, being the academician, the data has been maintained by the company at the right moment. For example, in a digital form. There are so many because whenever you are making any kind of transactions, it has been converted into a digital form. So the data generation is very important. Once the data generated, where it has to be maintained, because Sir has rightly mentioned about this kind of data manipulation and the window dressing. So this is the things are going on. Why going on? Because you want to survive in the market. Unless and until you survive in the market, you have to show your profits again, because of this kind of profits. Once you are showing that, then your market price of your share will be increasing. That's the tendency of the. There are certain. The other aspect is that managerial compensation need to be high. So these are the different objectives that the window dressing taken place in a different form by the different companies, either with the help of the auditors or with the help of the other unscrupulous people or the board members directly involved in this kind of process. That Sir has rightly mentioned some of the important companies' cases. So being the researcher or being the academician, what is our role in a managerial decision or the professionals? So, see, sometimes being a researcher on this particular subject, there are so many researchers has been conducted by the researchers and academicians. For example, there are three important activities of the business. One is the key activity of the business. This is called the economic activity, for example. Second one is the investment activity. Third one is the first one is the economic activity. Second, investment activity. Third one is the other important activity is the raising of funds. So these are the three important activities. So these three activities of the business, look into these activities. If you don't do this, if you don't analyze these three activities properly, then how the business will run effectively. So just we are going back to the few years back in India, there are so many non-banking financial companies came out with different Ponzi schemes. So those who directly invested of those kind of Ponzi schemes without analyzing their main activities, what are the key activities of the business? People do not know their main key activities of the business. So this is the operating activities they do not know. Unless and until the income from operations or cash flow from operations, so how you will expect the profit or your rate of return will be increases. So that's why unless and until you do not know the operating activities of the business or the economic activity of the business properly, so the investment part is very, very difficult in that sense. So that's why the operating activities is very important analysis of the operating activities. The second part, when you talk about this, how you want to raise finance, where would be your sources of finance? Padmanabhan is rightly mentioned about the debt versus equity. So the debt and equity also is an important composition of your financial sources. At the same time, where you will be investing, that is what would be your portfolio, where you will be invested in a capital market or in a money market or in a corporate finance, where this is the important area the researchers is going on. So that's why there are so many works done on this particular three activities of this of the financial statement. That is reflected basically through the balance sheet, income statement, and cash flow statement in a financial statement analysis. So either the liquidity analysis or the cash management analysis or the capital structure analysis, whatever. There are so many studies carried out by the researchers of a specific firm or a macroeconomic parameters or a particular organization or a particular group of companies, whatever. So that's why the macroeconomic factors, parameters, or the particular companies, cash management, working capital management, there are so many areas the researchers are carried out, and there are so many initiatives taken by the government to improve this kind of situation. Now I come to the another important aspect at the right moment. For example, what is the challenges at the right moment for analysis of the investor's perspective? For example, if you look into the banks are investing huge amount of money in the form of loans and advances to the different companies or MSME sectors. So if you look into the bank's perspective, they need a valuation of the company. So valuation is very important. This is number 1 point. So once the valuation is being done by the registered valuers, I know the Rajiv ji is well known about the those who are the registered valuers. They have to be enrolled or passed from the either the valuers organization like the CA Institute or the Cost Institute or the Company Secretary Institute or the designated institute formed by the MCA. So you have to value the organization properly. Unless and until you will value it, so it's very difficult to invest or giving loan to the different companies. So from the managerial perspective at the right moment, valuation perspective is very, very important. Unless and until you value the business from the different perspectives. The valuation takes place. There are certain principles involved, certain rules involved, certain approaches involved, certain tools and techniques involved, certain methods involved, as well as certain basic concepts involved. For example, there are different value concepts. So fair value, market value, economic value, terminal value. These are the different values, concept of values involved at the time of valuation of the different types of assets. Either it is a financial assets or it become the PPE, plant, property and equipment. So that's why the free institutes offering this type of two important courses for the professionals, those who are those who would be the registered valuers for the different organizations. Whenever you want to borrow money from an organization, from a bank or NBFC, you have to give the valuer certificate so that the valuation is done by the different organizations. At the same time, when you look into the financial assets valuation, because financial assets, there are different financial assets that shown in the balance sheets as well as the other statements. So there are certain assets, example, the assets and liabilities, of course, the equity valuation, the bond valuation, the other intangible assets valuation, or the in the derivatives instruments valuation. So these are the different valuation instruments have been valued by the registered valuers for valuation of the business and organizations. It is not likely this only the business to be valued. Specifically, there are certain other aspects likely the acquisition. Whenever a company would go to the acquisition, then valuation is important. Once the valuation starts, then you need to assess the financial statements, need to analyze, or rather we can say dissection of this kind of financial statements properly. So that is why from the analytical perspective, there is another wing has been opened for the researchers whenever we go for this kind of valuation aspect. Keeping in mind of this kind of present study carried out by the different researchers, the other aspect is a valuation aspect. So internationally, there is a International Valuation Standard Council. They came out with several standards for valuation of the different types of assets. The assets, either the financial assets or assets become the PPE. So those who want to value or the organizations, they have to follow these kind of standards as well as standards set by the ICI. So these are the different approaches. There are so many approaches, relative valuation approaches or the contingent valuation approaches. There are so many approaches have been adopted by the organizations, those who want to value the different types of assets, either the financial assets or the non-financial assets of the organization. So I know this kind of courses not yet been there are in a piecemeal way that the courses have been included in a BCom level or a master's level or a MBA program level has been included. So after that, there are certain other statistical and econometric tools have been adopted for correct valuation or more and more accurate valuation process. At the same time, Sir is also mentioned about the two important, the new technologies has been developed for retrieving data and tracking data and evaluating of the organization. One is a artificial intelligence and second one is a blockchain. So these are the two new methods have been used by the companies at the right moment for tracking of the data, for evaluation of the data. I know the Rajivji is a very senior most accountant and auditors. So they have been adopted of this kind of artificial intelligence technique for retrieving the data and analyzing the data. For example, any kind of mismatching or misleading data, whether it has been made by the company intentionally or unintentionally, whatever, so that it can be checked further, that window dressing would be reduced. So that's the objective of the valuation from the different perspectives or the valuation perspectives. There are some statistical tools or the panel data analysis. For example, I want to evaluate a company for a longer period or so many variables. So that's why there are different panel data analysis techniques have been adopted by the different researchers, right? So at the same time, they have to adopted the other macroeconomic parameters because they want to compare their companies with the macroeconomic parameters or the industry as a whole. So as a whole, this kind of topic has been selected for discussion today is very nice because for the last 3-4 months we are discussing on Indian economy as well as the different sectors, financial markets. The webinars are conducted mainly the commerce and the management department, mainly the focusing on the impact of COVID on Indian economy and the industry. But this is a very important area at the right moment because all data have been digitalized and it has been maintained so many ways by the different companies in their own database management system. How to retrieve the data, how to set the data, how the non-financial data to be captured, how it will be converted into in a form that you can be interpret properly, because there are so many reports have been published, either the business responsibility report or the corporate social responsibility report or other reports have been published. So whenever we do consider about the managerial perspective, only the numbers is not sufficient at the right moment. Number is important, but at the same time, along with the numbers, there are non-financial information has to be considered. This non-financial information also gives the direction in which way the company moves towards the future direction or the future course of action, because there are so many ifs and buts as well as the problems may be facing by the company of the different sectors. So that's why the business valuation at the very important aspect at the right moment, as well as the analysis of the financial statements for decision making. I would like to end with the concept of this micro and small business. At the right moment, the micro small business are facing a lot of challenges at the right moment. So they have borrowed huge amount of money from as a whole, from the banking and non-banking financial sector. So unless and until their company, their institutions have been valued properly, so it is very difficult to run or sustain in the long run of this kind of business. So valuation is very important, and those who are a registered valuer or the other professionals, they are valuing this kind of financial statements to rightly provide the data to the different stakeholders so that they understand it properly, as well as they decide whether the firm is able to repay the loans or any kind of the objective of this kind of valuation or not. So with this brief note, once again I am thankful to the organizer for giving me the opportunity for sharing my views, basically from the perspective of the valuation valuation perspective, why the financial statement analysis is important on the valuation perspectives. There are so many other perspectives in the FSA analysis. There are so many tools have been adopted. There are good standard books also available, published books available. But at the same time, these are the new dimensions where the students or the researchers or the academicians can contribute more and more from this perspective. So thank you once again for giving me the opportunity. Thank you once again. Thank you, Pattanayak. Over to Pattanayak, sir.
Hello, am I audible, sir?
Yes.
Yes. So very nicely both Professor Sana and Professor Ball has presented the topic, and Chartered Accountant Professor Sahu has already left the meet. So due to certain exigencies, now I want to request to all our participants to give very specific questions for Professor Ball and Professor Sana. So one or two questions were there previously, due to technical problems, so those are deleted. If any other questions, please. So till now, no specific questions that we have received from the participants for Professor Bol and Professor Sana. And majority, I mean, it's that about more than 75% of our participants, so they have highly, appreciated the speeches and the presentation of Professor Sana, Professor Bol, and Chartered Accountant Mr. Sahu. And all they have mentioned in the chat box. So information was very good and information was very informative. So nice presentation. So likely. So all our participants, so they have given their comments and remarks. And if any very specific question in the minds of the participants, students particularly, so students and researchers. So one question for the Professor Bol. As a financial statement ignore inflation accounting, then how can we say that it shows a true and fair view?
Thank you. It's a nice question, but please remember the inflation accounting is important for those countries where the inflation is very high, say in double digits. Fortunately, in India, our inflation rate is not that high. Therefore, even though for internal control purpose, some companies are using inflation accounting, but for reporting purpose, this inflation accounting or inflation adjusted financial statements are not being prepared. So that is the reason why Indian companies are not preparing this inflation adjusted financial statement. Is it clear? So the reason is in India the inflation rates are not high. It's moderate. So therefore we are not using. It's there. We are teaching in final chartered. We are teaching inflation accounting and also in some of the master degree courses. But in actual practice, it is not being used for reporting purpose.
The question was received from conceptual accountancy and management. So one organization for the conceptual accountancy and management, so they have asked this question. So is it clear for you? The question which we have received for Professor Bol, so that was given by conceptual accountancy and management, the title, so they have written. Okay, so any other questions, please provide us in your chat box for Professor Bol, for Professor Sana. So one question for Professor Bol, it is there. So from the conceptual accountancy and management, so that means our financial statement is no 100% accurate.
The chartered accountant, Mr. Rajiv Sahu, also told regarding that the financial statements which many companies are preparing, there is some disclosure. The transparency is not 100%. I think there is no doubt regarding that, no second opinion regarding that. Even in India, the companies which are very famous for disclosure like TCS, Infosys, they also faced challenges some years ago, some of you know, regarding disclosures. So we should not expect 100% transparency in this regard in the preparation of financial statements. Yes.
Okay, so any other questions for Professor Sana, please, participants? So one question from received from S. Das. how is the country's GDP and inflation is going to affect the whole analysis? Professor Paul.
GDP and the other one. You see, we are discussing financial statements of organizations. These are macro concepts, the gross national product. These are macro concepts, and in the macro level they influence, not at the micro level. That is my observation. So when we are preparing or discussing financial statements or financial statements analysis, we are not discussing this analysis for India, for our country. We are discussing this analysis for the organizations. Sometimes it may not be business organization. We can also discuss financial statement analysis. So whether it's business organizations or not-for-profit organizations, they prepare financial statements and we can analyze them. I have already told you what are our objectives and how we analyze, why we analyze. Those are important. No doubt the economic environment, the business environment, the GDP, all influence economic activity, all influence the business organizations. And it's during pandemic it's going on. And they also affect in a broad way the financial statement. Okay?
Thank you, sir. There's one question.
Sir, I just want to add. Professor Balsar rightly mentioned, but at the same time, for example, I want to analyze the share price of a company. Then this is the the share price of a company, share price of a or index, whatever. Then sometimes we are taking the GDP because the GDP has a positive and negative impact on the share prices. So that's why share price, when you talk about the market price or the book value price, so that has an indirect impact on the GDP impact on the share price. So that's why before going to discuss about the financial statement analysis, so sir is rightly mentioned of the business environment. This is a macro perspective always have to consider before analyzing the financial statements. That sir mentioned, I also again mentioned that the company is running, is a going concern, it's a running within the business environment of a particular country. When the country, for example, when the external agencies evaluate any particular country, for example, Standard & Poor's evaluate India. So they give some of the, the rate in India against the sovereignty rate, or the other different rates. So that is important as a macro perspective. Then they are taking as a whole of this kind of, the GDP growth or as a whole the corporate growth, as a whole the corporate profitability. They have to consider all this. So it is a macro perspective. So this macro perspective always be considered whenever you are taking into consideration about the group of companies or the particular sectors or even the micro perspectives. So this is my submission.
Thank you.
Sir, one question was received from one participant. So that was meant for whom he has not mentioned. So I want to divert this question to Professor Sana. Sir, do you think the use of financial ratios makes financial statements less comparable?
One second question.
Use of financial ratios makes financial statement less comparable. I think that's specifically he has not done the objective.
No.
So question is not clear.
Okay, so that is rightly. Okay, sir. Okay, no problem. So ratio analysis one of the. Please listen. Please mute your video. Please mute your video. Ratio analysis.
Mute your sound.
So, I repeat once again. Participants, please mute your video.
Hello.
Ratio analysis.
Please mute your sound system. One participant.
Biswas, please mute your.
Yes. Biswas.
You ask question to the teacher who is wearing mask.
Okay, I repeat.
So please mute your sound system.
Okay, I repeat once again. So the analysis tools are different. Ratio analysis, one of the fundamental analysis of the financial statements. For different reasons. For example, we want to analyze the profitability, we want to analyze the liquidity, we want to analyze the solvency. Right. Ratios are key parameters for analysis of the different perspectives.
Control room, we can stop
It is disturbing us.
from the control room. From the technical control room, we can mute Biswas. Okay.
Mr. Biswas, please mute your microphone. Please mute your microphone. Mr. Biswas, please mute your microphone. All the participants, Mr. Biswas, please mute your microphone. Thank you.
Now.
Okay. So the ratio analysis, one of the fundamental analysis that sir is mentioned, and again I am mentioning that this is the key parameter for analysis of the financial statements for different purposes. For example, the profitability, for example, the liquidity, for example, the solvency, or so many others. Even the other analysis like the different type of analysis that we are using ratios by the researchers also. So how you will be using the ratios 1 year, 2 year, or the longitudinal database, whatever. It is depends. So it is a very, very important parameters for analysis of the financial statements as well as for decision making. So we cannot say it cannot be avoided. So this is a submission.
Okay. Padmanath, we can conclude.
We can conclude, sir. Okay, so many thanks to our three panel members. Very nicely, so they have presented the topic. Professor Ball, so he analyzed and discussed on the significance of the financial statement analysis with a lot of examples, real life examples, and very informative session. So that was, and all of our participants, what I am seeing from the chat box, so they all appreciated what Sir has expressed. So similarly, Chartered Accountant Sahu is also presented very nicely his part. Chartered Accountant Sahu is at present is not with us in the meet, and everybody appreciated him, and he discussed on the true and fair view of the financial statements, and he discussed also how the window dressing and manipulation of the accounts are harmful to the nation. Very rightly he said this, very rightly he analyzed all these things, because he is a chartered accountant, and the role and honesty of the chartered accountants, the auditors, he analyzed also there. So many thanks to Professor Ball and Chartered Accountant Sahu Chartered Account Sahu of course left the meeting, and Professor Ball is with us. So my heartiest, let's say, thanks to Professor Ball, and my heartiest, let's say, thanks to Chartered Accountant Sahu also, and Professor Sana. So he discussed a lot on the valuation perspective, and he analyzed so how valuation perspective is important in the financial statement analysis, and particularly on the business valuation. And he discussed at last on micro and small business houses, the financial statement analysis of a micro and small business, and how they are to manage and how they are to see their future. So that he also analyzed very nicely. And 2-3, let's say, questions of the participants. So he has answered very correctly, and participants also, let's say, remarked that they are satisfied with the answers. So I also give thanks to Professor Sana. So all our 3 panel members, so they have devoted their valuable time for this and shared a lot of information, and completely, let's say, we can say in a very short, let's say, wording. So the session was completely informative, and the session was very nice. So with this, I thank to all our, let's say, panel members and all our participants. So our participants were the researchers, our participants are the students, our participants are also the corporate professionals, our the participants also a number of, let's say, professors I have also seen from the chat box and from the information provided to me. Okay. So from a varied, let's say, group of participants were participated in this program, and all, so they have mentioned so very nice information and informative, very informative also, and nicely all our panel members presented the topic. Okay, so once again I would also like to give thanks to all our participants and panel members. Thank you, sir. Thank you, Professor Ball, and thank you.
Thank you very much.
Sir, namaste, sir.
Namaste.